This is Greg Vincent, the editor for Top Producer Magazine. I'm talking with Top Producer Marketing Strategist Jerry Gulke, the head of Strategic Marketing Services at the Chicago Board of Trade. And Jerry, USDA came out with an unprecedented move this morning with the new numbers, revising their numbers from the October 10th supply and demand report and crop production report. So let's just quickly talk about the numbers and then get into a little bit about what that might mean for the market.
Okay. Actually, if we go back to the October 12th crop report, I believe it was, or October 10th.
October 10th.
October 10th. The government back then came up, the USDA came up with 2.2 million more acres of beans, and a lot of us wondered where did all this come from. And it wasn't that ironic that we suddenly found acres and beans, and it was detrimental to the bean prices, as we all know, as in addition to the demand destruction we're seeing worldwide due to the economic malaise we're in. But there's always some question in everybody's mind that, was this for real or not? And the thought is we would have never seen anything corrected until next September 30th, when they have a tendency to revise everything to say, oops, we had more production, less production than we needed and all that. And lo and behold, they come up with this. Apparently what they're telling us is that this was a computer error, and I can't deny that that's probably the case, because they came out with it very quickly after they found it. But what they found was that they had to lower the planted acres, or harvested acres really, of soybeans by 1.1 million, and corn, ironically, of 1 million. So there's that 2.1 of the 2.2, and maybe there's 100,000 acres somewhere that we haven't heard about, or it's unimportant. But so that lowered, of course, production. But in turn, that they did lower the exports, 50 million in corn and 30 million in beans, to help offset maybe some of the decreased production that we're seeing. And they lowered the feed usage by 50 million bushels in corn, left ethanol unchanged. And if there is a consistency that USDA has had in all these reports this summer and this fall, is that they've constantly left the ethanol, corn used for ethanol, unchanged, refusing even to lower the demand in spite of the fact we've cut crude oil in half and ethanol is having a hard time. So interesting. They left then, came up with a carryout of for this year of September 1st, August 30th, of 1,088 million bushels in corn and I believe 205 in beans. So that tightens things up a little bit. The implications of this is, again, going forward, is what does this do to next year? And you have to make some assumptions, I guess, and we'll say, well, because of high cost of fertilizer and all these things, maybe we won't increase acres in corn at all. We may be lucky just to maintain what we produce this year in planted acres, and that seems to be the case unless fertilizer falls apart, which it should. It ought to fall in half based on world collapse in prices.
Even after these numbers, Jerry, you're thinking we would stay the same?
Yeah, it's a foregone. We deal with some large fertilizer producers in the country, suppliers, and similar to the people that I buy from, but and there are clients that sell chemicals and fertilizer and farm as well. And in West Central, Corn Belt in particular, I think in Oklahoma, their cost to their door this morning was $575 a ton for anhydrous. That's a grossly under the $1,200 quoted me in North Dakota and $1,000 in Northern Illinois. And the problem is, a lot of guys got enamored by the predictions of $200 a barrel oil, and they locked up their fertilizer, thinking that Jerry's going to come later on. He's going to have to pay me a lot of money for this stuff. They got caught, just like a speculator may get caught. So while we badmouth speculators, there's some of that in each one of us. And so we got some suppliers that bought this stuff and now can't sell it. We've got farmers that bought it for $1,000 a ton, putting it on now, I'm sure, knifing it in. And whether the fertilizer will drop in price, to me, that I didn't buy any, whether I wait till spring or not, is questionable. It's going to be a real problem for the suppliers, and all you got to do is look at some of the stocks. Terra Chemical and also Potash have fallen out of bed completely stock-wise. The market out there, the stock market equity people are suggesting these guys are going to have some huge losses, and that's why their stock is selling at half to one-third of what it was just 3 months ago. So it's coming. How we do this, it'll be a big question. If we go ahead and pay it, if you sold corn for $7 for next year, you can pay it. If you didn't sell any corn for next year, which a lot of farmers probably did not, then you've got to pay less for fertilizer, or you got a $200 an acre loss in producing corn at these prices in central Illinois. So the implications are going forward in corn is that if you keep acres stable, we could and you increase yield slightly to maybe 3 bushels next year, and you're going to increase some feed demand. We're pumping a lot of money into the U.S., and maybe exports hangs in there at $2 billion. I doubt it, but if it does, I think we'll drop $150 million this year more, and then we'll maybe gain it back next year in exports. But you could see carry over next year on the crop that we plant in 09. The end of that year, crop marketing year, well under 1 billion bushels, maybe 750 million. So it says you really need more acres. You got to buy more acres somehow, and you don't dare let them go to beans.